Yes. Hello, wonderful traders. Welcome back to UCFX. Welcome back to another wonderful video. This channel is all about helping new and struggling traders to become acquainted with the necessary information and knowledge to be profitable in the forex market. So support us on this wonderful journey by clicking the red subscribe button and clicking on the bell notification button to be able to get our new videos whenever we upload them. Thanks for doing that. And as well, remember to drop in the comment section any topics that you would want us to make videos on, or anything that you might be struggling with. Just drop it on the comment section. We do well to get back to you. So, without wasting much of your time, let's get into what we have for today. So, how to understand market structure. Yes, before we proceed, if you have always wanted to learn smart money concepts, I have a compiled video of that in the description below. So I organized the video step by step for proper understanding. Unlike other YouTube channels or other places in the YouTube, you would not easily find it in this kind of compiled form. So I have compiled it from episode 1 to episode 5. So do well to check it out after this video. Yes, how to understand the market structure. Are you always confused on what the market is about to do next? Worry no more, because this video is going to open your eyes to read and understand what the market is about to do next. So to understand and as well to understand what the smart money is about to do. So let's try to understand the basics of market structure first. So yes, let's say we are in an uptrend and this is our daily chart. So we need to build a story from our higher time frames to be able to know what the lower time frame is about to do or is going to do. So let's say this is our daily chart and the market is in an uptrend. So you would agree with me that there is another block inside this area. So you will be marking that out. Why is it another block? We have a break of structure. So after marking it out, you need to wait on the lower time frame for price to come back and tap into this other block. And for price to come and tap into this other block, we need liquidity. We need traders that will be going long. Why? Because the market is in an uptrend. So everybody wants to buy. Everybody will think that the market is going to keep buying the less informed traders. So the smart money is going to use that liquidity to take them out and drag this market into this zone. So how are they going to do that? Let's imagine this scenario happening in the lower time frame. Let's say the market does stuff like this, then go back up, come back down again, and remain in this zone. What do you think that traders will start doing? Most people will see this place as a resistance area, trying to go long to continue the uptrend. And most traders will as well think that this is a trend line. You see? They'll think that this is a trend line, or the market is actually going to buy from this area. So although sometimes the trend line might work, but it depends on what the smart money is trying to do. So from the story that you have built, you said you want to see a tap into the other block. So you need to wait for this liquidity to be taken out. So after seeing this, you don't need to buy. So you will allow liquidity to be grabbed. So what will happen next? The market will start going down. The market will start going down, taking out this liquidity. The market will do something like this, taking out this liquidity and tapping into this other block. So because there is enough buyers, just like I said, they will see this place as a resistance zone, as a support zone rather. They will see this place as a support zone. From many traders' point of view, another traders will see this place as a trend line. So this is how the smart money grabs liquidity. So for you that understands the market structure, you know that there is another block, there is a break of structure. You wait patiently for your objective to be met. So after the market, the price must have met your objective and tapping into this area. What next do you need to look at? As you can see, many traders will start thinking that the market will keep going down. But you that understand the market structure knows that we have another block inside this area. And this is actually in a higher time frame. Just like most of us, we base on the lower time frame. We don't care about what the market is doing on the higher time frame. So as you actually know what the market is doing on the higher time frame, if you build a story from that, you would agree with me as well that we have let's take out this one. You agree with me that we have a trend line liquidity as well, because most traders will start taking shots off from this trend line, and some traders will as well try to take shots thinking that this place, oh, this place is going to act as resistance, or is going to act as resistance for most breakout and retest traders. So as well, we have liquidity on this side. So what do you need to look for next? You wait for your lower time frame confirmations. If you don't know how to trade using the lower time frame confirmation, do well to check the link in the description. You will as well see how to trade the smart money concept. So after waiting for a lower time frame confirmation and confirming this trade, the price would take out this liquidity. So after taking out this liquidity, your objective has been met. You would as well wait for price to come back and tap into your lower time frame order block. Then this is the place that you actually take your entries from. And as well, most traders, less informed traders that don't know what the market is doing, we keep selling. They will think that this area, oh, we had another nice area that the market was going to reverse from. So what next? The market keeps going up. The market comes to this area. Some traders will still think that, oh, it's still going to sell from this point. The market will keep on going up and up. So being able to build a story from the higher time frame will actually enable you to understand what the market is going to do starting from the lower time frames. Because if the higher time frame is bullish, for the market to continue in that bullish form, there must be a short-term downtrend in the lower time frame, and most traders will think that the market will keep going down. So let's explain this using the real chart. So price is finally in our point of interest in our order block. So just like I said, considering this range as well, checking where price is at. Price is at our discount level. Just like we all know, in case if you don't know, you can do well to go to check out the videos I put on the link in the description to learn the smart money concepts, to actually understand what I'm saying here. So anything below the 0.5 is called premium prices. Then 0.5 is actually called equilibrium. So here the smart money wants to sell or buy in from discount prices. Just like you in the market, you actually like to buy on discounts. So here anything above the 0.5 is actually discount. As you can see, we have our order block right above or right inside the discount prices. So that's where we need to place our focus on. That's where we need to sell or buy from. So in this scenario, we're going to be selling from this discount level, the 0.618 and the 0.786 of the Fibonacci. And that's actually where we have our order block. So every of our objectives have been met. So we are going to be using the daily time frame I'm going to be using the daily time frame to show you how this trade can actually be taken. So let's go down to the daily time frame. So here on the daily time frame, we have our last support here. So for us to consider this market a selling market, we need to see this support area got taken out. So we need to see it taken out, being taken out. So we're going to be marking it out and wait for the price, wait for price to take it out. Okay, yeah, as you can see, it got taken out. So what does this mean? This means in the lower time frame, in the H1, the H4 time frames, what we are going to be looking for is short all the way down. So you first of all check where you will be targeting as your take profit. So from this area, you would agree with me that we have a possible other blocks inside this area that took out these highs. So if you take your Fibonacci to this high, at least you should be targeting another discount level. Let's say you're going to be targeting this area, because we don't actually know what the market will do once it enters this discount level. It might continue lower or it might continue higher. But what we are interested is trading from this other block at least to take the market lower. So that's what we are interested in the lower time frames. So just like I said, after building all this information, this is where you now know that the market would actually go down or go bearish in the lower time frames. So imagine without having this information, you might be thinking that the market would actually continue going up from this area. But having a story and a built up strategy, you already know what the market is about to do next. So right from this other block, I'm going to show you the exact way you would have entered this market. At least you target this area, because this is the next discount level considering this range. Considering this range, so this is the next discount level. So price might decide to break this structure, or it might decide to reverse from this point. So we don't know yet, but we are interested in taking shots to this area. So let's go back to the daily time frame. So here in the daily time frame, we are targeting this area. So you will agree with me that we have traders trapped inside this area. You can see we had a support here, a support here. So most traders actually thought that the market would still hit here and continue going up. So we have a grab of liquidity inside this area. And if you check well, you will see that we have an order block. If you go lower to the H4, you will see a nice order block. So this is actually the order block that took out this liquidity. So we are going to be grabbing our tool to mark it out. So we are interested in this area to take this market lower. So let's see what the market does. Yeah, let's replay that. So right inside this zone, let's take our Fibonacci to know where price is. Yeah, as you can see, price is right inside our discount level, the 0.618 and the 0.78 of the Fibonacci level. So we are interested in selling from this point. So you can grab your so right here we have we are interested in selling from this point as a result of liquidity grabbed. So they need to come back and close this order because they had a little buy order inside this area. They used the little buy order to take out traders that were going long. So they need to come back and close that buy order, because the buy order is actually in a drawdown. So they are interested in moving lower. The smart one is interested in going lower. So they need to come back and mitigate this order block and they need to add another cell inside the discount level, because that's where they normally add the cells. So we are interested in selling from this area. So we need to take this out. So your stop loss will be above the other block. I'm just showing example. This is actually on a daily chart. So the replay is actually limited to the daily chart, so I'm using it to explain. You can try this out as well using the lower time frame. It will give you a much better entries. So I'm just trying to illustrate how you can actually anticipate the market movement or the direction that the market is actually going to take. So you will be targeting as low as, remember this is our target, the next discount level. So let's actually see if the market would reach there. Yeah, exactly. So this is how you can anticipate the direction of movement of the market using the higher time frame. So the higher time frame is actually the key here. Let me take it again. Just like I explained from the higher time frame, we enter this trade as a result of other block that form on the monthly time frame. So we anticipated that the market is going to come back to this other block to mitigate it, which it did, and this is the reason why we took this trade. So always try to base your entries from the higher time frame. Always try to build your story from the higher time frame. Try to understand what the higher time frame is actually saying before taking any trades. So that will be all for this video. Remember to drop any topics that you would like us to make videos on, or comment anything that you feel like, anywhere that is getting you confused, or anything that is getting you confused in forex trading. We are here to actually help you. Remember to subscribe to keep up to date on our new videos that will be uploading soon.